All right, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. It is the weekend, so it is time to go through our update for our 10K challenge. For those of you new to the channel, I will describe what the challenge is, but don't forget to subscribe and hit the notification bell. And also, everybody, please smash the like button for us. It helps out the channel a lot. Okay, so the 10K challenge basically is on January 1st, 2022, we put $10,000 into an account. We are going to try to grow this as much as we can without adding any money to it. We're going to take our initial investment of $10,000 and we have several goals, one of which is to see how long it takes to get $10,000 to $100,000. That is our long-term goal. As we said from the beginning, we don't expect to do that in 2022. This is not a get-rich-quick scheme. So that's our long-term goal. We have a couple of 2022 goals. By December 31st, 2022, number one, we want the challenge to have made money, right? We want to invest money. We want to make money. That's the whole point of all of this. So obviously, we're looking to make money in the challenge. The second goal is we would like to outperform the general market. So what we're doing is measuring ourselves against 8 different things. The 4 major indexes in the United States, the 2 largest cryptocurrencies, which are Bitcoin and Ethereum, and the 2 largest precious metals, which are gold and silver. So at the end, we will look at a chart and see how the portfolio is doing versus those 8 things. So it is our goal to finish in first place by December 31st, 2022. We want to be in first place out of all of those. So if you're new to the challenge, be forewarned. We've had a slow start, and this is a part of a long-term investment portfolio, particularly in a bear market like this. So I'm going to walk you through what I'm doing, and I did get an opportunity this week to dollar cost average into several things. So the portfolio consists of the following. You'll see there are 9 stocks and then there are some options. The options in total I try to keep between 10 and 15%. So I did buy a bunch of options this week as a way to dollar cost average in to my positions. So I bought options in those positions, and I did work my way up to the options being at 14.8% of the portfolio. So that is near the top of where we like to keep it, between 10 and 15%. So we're still on track with that. We have 9 stocks and we have 16 total positions. You'll see these are in order from largest to smallest. So CleanSpark is the largest investment that we have, and then down here XL is the smallest, and I will tell you Fubo and XL are extremely small investments. You'll see most of the other options that I have. I took an initial position in Volta. It had an earnings call that people reacted very poorly to. It plummeted, so I was able to buy some options, and I've dollar cost averaged into those. So the options now exceed the actual stock. That's the only instance where that happens. Typically, when you look at this list, the stocks are at the top, the options are at the bottom. So I just want to go through the 1 and 2 positions. CleanSpark is the number 1 position in the portfolio. Now, CleanSpark is up on the year for me. So this has been a profitable trade for me. So even though Romeo is the second largest position that I have, it is the position I've invested the most money into. And that is because it has pulled back significantly. So I have been dollar cost averaging into Romeo. So CleanSpark, I've gotten the benefit of a little dollar cost averaging in at the beginning and then a nice run up. Romeo, I've had the opposite. It's just been going down pretty much in a straight line. It was a falling knife when I started. We're going to look at that chart just so that you can see what my thought process was and still is. So essentially, I've added no new positions to this portfolio. However, like I said, I did get an opportunity to dollar cost average into several things, including options. If you saw my video last week, I was at the Bitcoin 2022 conference and I let a couple of trades get by me. I missed a few trades that I really wanted to make. I missed a few dollar cost averaging that I wanted to do. Unfortunately, though, fortunately for me, this week was another down week. So I got the chance to dollar cost average in on those things that I had missed at the end of last week. You'll see my portfolio is mostly comprised of small cap, high growth stocks. And that has been the focus of this investment strategy. So again, it's about 85% stock and about 15% options right now. And it's a total of 9 stocks. So I may like to add 1 or 2 more over the course of time, but I don't want to get too many more than that. Okay, so let's take a look at where the portfolio sat. And remember, this was a short week in the United States. So this was actually as of Thursday, April 14th. You'll see here the balance in our challenge is $7,099.08. So this is now our all-time low since we've been doing this. I believe this is week 15 of the challenge. This represents the lowest number we've been at all year. This portfolio has fluctuated up and down quite a bit. There has been a lot of volatility in this portfolio. It's been a very rocky road so far this year. So again, I did hold my 9 positions. I did not get rid of anything. I still have a high level of conviction in the stocks that I have invested in. There has been big volatility and they are down at the moment. So the other thing I want to show you is I have $843.88 on the sideline. We've been trying to keep about $1,500 on the sideline. So this is the lowest cash balance that I have had since we started the challenge, and this is week 15. So again, remember, we're not adding any cash to this challenge all year. We started with $10,000. We're not adding any money. So I have to manage the money that's in here as best I can. I always want to have some amount on the sideline in the event that opportunities present themselves. However, this week, a few things reached a point where it made sense to dollar cost average in. There are certain positions that I now consider full, and if they continue to go down, I will no longer dollar cost average into those. I will just sit on those positions and consider them full. There are other positions that are not at that point yet, and there's a few new positions that I'd like to get into that haven't quite reached their point, and I'm getting low on funds on the sidelines. So I got to balance all that together in my buying decisions. So you can see, once again, on the last trading day of the week, this portfolio got beat up pretty good, down $357 in that one day. We were down about $700. Week 14 and week 15 were the two biggest losses we've had in a week in the entire challenge. So with that said, let's take a look at how we're doing against our competition. Okay, so here's the board. You'll see silver and gold are still in first place. You'll see that percent change year to date. These are the only two things positive on the year. All the indexes are down. All the cryptocurrencies are down. And the 10K challenge is down. So silver and gold continue to dominate. They've been 1 and 2 every single week all year. This is now 15 weeks in a row. That is not normal. And I will say again, as I do every week, I do not expect them to finish in 1 and 2, but we'll have to wait and see what happens. So the S&P 500 had a tough week. It was down 2%. The NASDAQ had a tough week. It was down 2.6%. Cryptocurrencies had a very tough week. Bitcoin was down 6.9%. Ethereum was down 7.5%. The only things that were fairly stable, the Russell 2000, for whatever reason, was actually up 0.5%. And then obviously the precious metals, silver and gold, were also up on the week as well as the year. So you see the portfolio lost about $700 this week, and it was down about 9%. So this was another big down week. So this leaves us down 29%. It leaves us in 9th place. We were in 4th place just 2 weeks ago, but it has been a very brutal 2 weeks. Now, fortunately, I did get the opportunity to dollar cost average into a bunch of things this week. I feel very good about that. So hopefully over the next 3 or 4 weeks, we will start to see a reversal in these small cap high growth stocks, as well as the 3 stocks that I have that are Bitcoin related. So through 15 weeks, we're at $7,099. We are down 29%. So I'm not going to skip a week regardless of the outcome. And obviously the last 2 weeks in a row have been very down. But I want to reiterate, I have not sold any stock. My stocks are down. Those are paper losses. I have not sold any of them. So if my stocks recover the way I expect them to and actually go up, then I have had no realized losses yet to date. Now, I am keeping my eye on these because there's 9 different positions I'm in. If the story changes on one of these, or if I lose my confidence in one of these, I may have to decide to change something up. But at this point, I still remain a high level of conviction on those 9 positions. Some of them are down fairly drastically. I want to just show you one position real quick, and then I'm going to wrap this video up. So when you hear people talk about a falling knife, this is a falling knife. I have an investment in Romeo. I do feel good about this company. They've had a series of good news over the last few months, but they had some devastating news about 8 or 10 months ago, and they had a very tough stretch. So this yellow line right here represents my first purchase of Romeo when the 10K challenge started. So what I want to show everybody is that when I started my purchases of Romeo, and I have dollar cost averaged into this, Romeo was already down 90% off of its highs from just over a year ago. So that was my opening position. It was at its all-time low, down 90% from its highs of a year ago. I'm going to zoom in and show you what's happened since then. Okay, so here's here's January 4th. That was the first time I bought into Romeo. And again, I've averaged myself in. So this yellow line represents my initial purchase. This green line right here represents my average cost in the stock. So I started at $3.66. I've dollar cost averaged myself down to $2.23. Since then, the stock is down another 65%. So this was a falling knife when I bought it, and there is always a risk. You don't know where these land. So down 90%, I felt like the risk reward was in a good spot. So I started dollar cost averaging in. I've done all the dollar cost averaging I'm going to. This position is filled out. My cost basis will remain at $2.23. So if this continues to fall, I'm just going to have to either grin and bear it, or at some point, if I decide the company's story has changed, I will reiterate, I do have the same level of conviction in Romeo. The story is still the same in my opinion. So I will wait on this one. I will not be adding to this position anymore, but I wanted to show you this because this is an example. As we do risk rewards, when you've got something that's down 90% and at its all-time low, there is no line of support under that. So you don't know where the bottom is. So all you can do is dollar cost average in, and you can see how much I've brought my cost basis down in this one. Now, you can only allocate so much to one stock. I've reached what I consider to be a full position, but I just wanted to run through this one as kind of a learning curve or example of what can happen. So just because a stock's down 90% doesn't mean it can't go down another 65%. That's just what happened to this stock in the last 3 months. And we don't know that this is the bottom. It could continue to go down from here. So this is why you have to know your stocks and know your companies and have conviction in them, because if you don't, you are very likely to buy high even though you thought you bought low. It will end up that you bought high and you sold low because you lost confidence in your stock. So that's all I've got for the 10K challenge this week. Thanks so much for watching, and we'll hope for better news next week. Please, everybody, remember to subscribe to the channel and smash the like button.